What's up, everybody? Ricky Analog here, True Trader, here for another edition of the Sunday Prep. Make sure you guys click the like or thumbs down, up to you, and subscribe just so that you get notifications when these videos come out. We have been putting out some other content throughout the week, and so if you're not subscribed, you won't get the notifications about those ones. So do me that solid. Hopefully the YouTube algo picks up on this a little better and can get this in more people's faces. Want to touch on something real quick before we get into the prep, and that is a discussion I've been having with a few of my peers over the weekend, and it all kind of centered around the same type of issue, and that is taking trades where you just put a little on. And I always want to remind people, like, what is it saying about your conviction in a trade if when you go to put it on, you just want to put a little on? You don't have the conviction to put your full size on. It really says a lot about what you think the grade of the setup is. Is it A plus? How can it be A plus if you really just want to put a partial starter on? Now, I get the whole idea of putting a starter on in order to add when it confirms. That's different. But what I'm talking about is literally wanting to just put a small piece on because you don't really like the setup enough. That, in my opinion, is a terrible strategy. I think a lot of people that do that find themselves that those always end up being the ones that get them. They either end up adding to a loser, or by and large those trades just don't work out because they're not A plus. So when you put on trades this week, I want you to ask yourself, do I have enough conviction in this trade to hammer it with my real size? If you don't, consider pulling back a bit. Take a second to really think it through. Do you want this trade? I just want you guys to kind of keep that in the back of your head as you guys travel through the markets this week, all right? So housekeeping, as always, I'm not a licensed registered broker, neither is True Trader, and I'm not a licensed financial advisor. So anything that I say is not a solicitation to buy or sell a stock. It's just for entertainment purposes only, guys. I'm really just telling you guys what I'm going to do and the way I see things. And these are just my opinions, guys. So let's get into it. As always, the broader market is where we focus first. Everything looks nice and healthy with the ES. Some of the earnings plays last week that were trading at all-time highs did kind of get those pullbacks. We saw Amazon get crushed, a few other names as well. Microsoft came in off the numbers. But the market actually held in pretty well, consider, right? Now, we'll see what happens this following week or this coming week, but keep in mind, as long as we want to hold trend, we can keep going higher. It just is what it is. Will we hit 4,500 this week? Or yeah, that 4,500 level is what I have marked up here. Let me pull it down a little. So you got the monthly and a quarterly pivot up there, which is what has my interest on that level. Obviously, the 20-day is kind of like the first level of support. I actually think the 50-day would look a lot better. That 42.75-ish area is what I would like to see a pullback to. May get it, may not. Now, it is the beginning of a new month, right? We just finished July. We're heading into August. I'm going to come back to this chart again, guys. Remember this from last Sunday prep. We haven't had a monthly candle break the lows of the previous month since last September. So we're coming up on a year of that almost. Will we continue higher? I don't know. Will we break prior month's lows? I don't know. But I am prepared to know that if we do that, then that is sort of a red flag that maybe some things are starting to unravel. The other thing I would look for is lower highs on the weekly time frame followed by lower lows, right? Are things starting to roll over and come in? There's obvious levels of support if that happens. Obviously, we've talked about the 50-day on the daily chart here, which would be 42.76. That's not going to put us below last month's lows. I have it marked here. It's the bottom of this red candle that was the retrace back into the 50-day. If we come back and lose those lows, then I'm going to look to see how the market reacts when it pops. Do we start putting in lower highs, or do we actually start reclaiming and having maybe a base form? So the NASDAQ next. Let's pull up this chart. Again, looks healthy. We've had pullbacks. It's still never quite pulled back to that 14,000 level, which is what I would like to see. One of the things that we keep talking about is you don't want to fight the Fed. The Fed keeps printing money. The market's going to keep going higher. Actually, let's roll back real quick to the ES monthly that we were looking at when, because I do want to point something out. That's the weekly. Here you go. We've never had the S&P accelerate upwards at this rate for this long. So we have to start assuming that eventually this is going to get long in the tooth. The bull market will get long in the tooth, and it's going to need to at least, at the very least, take a sideways breather, if not retrace and reset and pull back to some levels. This right here is just the Fed supporting this house of cards, guys. I don't want to be thought of as, you know, some perma bear. Like, I'm not Northman or any of those other guys. Trust me, I've been making money on the long side plenty during this bull market, but I'm also very objective when it comes to analyzing where we're at. And so eventually the Fed's gonna have to quit with the money printer. They can't just print us into oblivion, right? When that happens, guys, this chart pattern is probably not going to hold. We're probably going to have some levels that get breached, and eventually panic will set in. Again, I'm not trying to be the sky is falling, the sky is falling. I'm just trying to make sure that everybody's prepared for this. I hate to see people get hurt and act like they couldn't have seen this coming, like there wasn't some sort of sign, right? There's always these signs. You need to know what to look for, and I'm trying to point them out. So like when we start to see these things, take note, don't ignore it. Okay, that's pretty much the note I had on that. NQ extended as well. You can see the Nasdaq's really never had a move like it's having now, and again, I think 14K would be where I would finally feel a little bit better about trying to put some swing longs on and see if some of these strong tech names have pulled back to support and are starting to look like they're going to hold a level, and then I may look to get long on some stronger names. But again, I'm always keeping the bigger picture of the market in the back of my head, guys. Let's see, let me pull up the pivots real quick on it. I think I had something marked. Yeah, 15.7s, actually 15.4. Let's just call it 15.4 would be the first spot where I'm looking for some resistance on it, and then after that, the quarterly up there at 15.7. And so after that, we go into the Bitcoin stuff. Again, we've breached this channel. We've kind of broken out of it. Nothing that I would say is convincing as of yet. Doesn't mean that can't change at any moment. But the first spot I'm seeing where we may end up with some resistance is going to be that weekly 20. And my guess is that a spike into that level is probably going to get rejected, swatted back down. Now, what you want to watch for is when it retraces back, if it does, right? If we pop into that level and it gets smacked back down, you want to see, does it get knocked back into the channel where we were doing all that sideways action week after week after week, or does that area of resistance turn into support? If that happens, if it turns into support, we may be preparing to make another push higher. Wait and make sure you have confirmation first before you start getting ahead of yourselves on it. That's my only note on that. So then let's take a look at the sectors, guys. Again, you can't really see them because I know they're a little bit behind my my video picture, but I will just point out the one thing that kind of stood out to me, guys, was the materials and utilities, or not utilities, was materials and utilities actually have been picking up over the last month or so, and that's usually kind of a red flag, or at least something to pay attention to in terms of where we are in the business cycles. And I actually included in the written prep this week a chart, which you'll see. I'm just going to put it up here, guys, and it just shows you like what sectors typically perform best in what part of the business cycle are we in. So like you can see when we're in these late cycle things, the stuff that we're seeing perform well now is what you typically see perform well. So it's just another one of those red flags. Keep that, put that right there in the folder with that ES monthly chart, right? So now let's get into the actual ideas for the week. First thing we look at is long setups, strong stocks for continuation. XM is the first chart I have, and I really like this chart, guys. I love the look of this curl off the lows. And you know, we had a really strong close on Friday, and basically what I would be looking for in the notes I put, just a retrace back into 40. Pretty much that 40 level. You can see some highs from those previous days up in there. And I think if we flush down to that, that's a nice spot to scoop it. Next on the list is AMD. I mean, how do you even argue against big green daily candles like that with the volume to make it, you know, legit? That's a legit move on legit volume, okay? And what I pointed out to chat last week was the last time it made a move like this was when it broke out from this base over, let's just call it 58.60 level. And people were trying to say, oh, it's extended, it's a short, right? And a lot of people got hurt because they fought it. And, you know, famous last words are like, something is extended, it shouldn't go any higher. Nonsense. Look how high it went. And then when it finally did get up to these highs, it never came back. It just went sideways and created the next base for this next leg up. So that's why I'm not looking. This is, you know, I guess you could say that there'd be a case to make where why isn't AMD in your overbought reversion setup section? And it's because this name is a strong name breaking out of a long sideways base. I don't want to step in front of a name like that on the short side. So what I would be looking at is a retrace back to this 100 level, 99 to 100. A retrace back to there, I think, is a good spot for a bounce. Next, we have the oversold reversion setups. 3 of them on this week. PayPal's the first. Guys, see that we've come right into that 273 level. We're right into the pocket, which was the breakout from the original push, which was what we actually had as a swing long. We sold it into these 52-week highs, which obviously it's always nice when in hindsight things work out like that. You know, it very well could have just kept going higher, and I probably would have just been slightly irritated to watch something like that continue up even further. But it is what it is. It rolled over, it came back in, and now it's back into levels where I kind of want to start a long again on it. Look at the weekly too, just looks absolutely beautiful. The 269 is the weekly 20. Anywhere in these levels, I'm looking to start a swing long. But like I said, remember what I said about the market, I'd like to see the NASDAQ pull back to that 14,000 level first. It may not, and this may not pull back any further either. So it's kind of going to be like, we're going to kind of be touch and go, see what it wants to give us, because, you know, you got to take what the market gives. If the market doesn't want to give us a bigger retrace, you're not going to get it. And you either have to adjust your plan from that point forward, or you just miss the trade. And either of those things are okay. It's just personal preference, right? W. Love this level it's coming into. 220. Let's see. What did I have written down? 223 is the spot where I want to probably take a shot at it. And let's pull up on the daily. See the levels I have here. 223 puts us right in line with some of these recent lows and this consolidation period from back here. And that would be a flush down there, I think, is, you know, a good spot to take a shot. It's probably a good high probability area where we're going to find a bounce. Now, obviously, if we lose these lows under, let's just say under 220, I'm not going to fight it. This thing may want 200. A lot of times we see stocks tend to want to test those psychological levels. So 200 would be in the next spot, but I'm not going to ride it from 220 to 200. That's not the way we're playing this. I'll take my shot. If I get the bounce, good. Lock in my profits, move on, great trade, next. If it stops me out, no problem. It's risk management. You take your loss, look for the next spot. 200 is the next area where I would have interest in this. Oh, and I did want to point out the monthly chart on this one. Boom. Monthly chart agrees with me on that level. 220.55 is currently the monthly 20. Tomorrow's a new month, so the new monthly 20 will probably be adjusted a bit higher. So I'm thinking that 223 level actually looks really good. Let's see, Las Vegas Sands. Remember, guys, there's the looming lockdown with this new COVID resurgence. So, like, that's probably what is going to be the deciding factor on these hotel names and how they behave. But I do have, what was it, 40, I think? Let me turn on the pivots. Yeah, 40 is the first spot, 40 and a half-ish. If that doesn't hold, 37, it has my attention. It's just starting to speed up. I want to see that panic flush. If it gives the panic flush, I want to be there for scoops for those relief bounces on these names ain't going nowhere. They're going to give good bounces along the way. So when we get those emotional panic flushes, that's where I want to be there. So that's it for the longs. Let's move on to the shorts. Weak stocks looking for continuation. The only one I have, guys, is ARKK. I know this one's probably, everybody's going, oh shit, Ricky's going after Cathie Wood's names. Well, think about it this way. In the last few weeks, a lot of the names that were on my Sunday prep for weak stocks looking for continuation were names held by Cathie Woods and ARK, right? So it makes sense that the ETF itself is looking the same. It's really struggling to reclaim this 200-day. So basically what I'm looking for is pops back into the 200-day, watch to see if they stuff, then look for lower highs and try to join trend. If it just wants to flush off the open on Monday and lose the 50-day, I'd probably just as well look to start the same trade just lower, using lower highs and some sort of defined risk by the trend, right? So like when I say that, hopefully you guys understand, when I'm looking at lower highs and I'm trying to join trend, I'm using previous highs as my defined risk. So you can put the trade on, know where you're wrong, because if something's going to roll over, it's going to have to continue to make lower highs. It can't start making higher highs because that would be reversing trend and we would be heading higher. So don't fight things. Read the trend. Read what the author is writing. So the other section for shorts is the overbought reversion setups. And the only one on my list is BX. And what I put in the notes is it's not there yet. This very well could pull back to the 20-day from here. The problem with that is that I don't have enough conviction in that setup to put a real trade on. Meaning exactly what we talked about before we started the prep, which was I only want to take trades where I have the conviction to really put a trade on, not just sort of dabble, right? I don't want to take a dabble trade. I'd rather just miss it. Now, I'm keeping it on watch because if it extends higher, if we push 130, something crazy happens, I want to have it on watch so that I stay familiar with it. It might not be something that happens this week. This may be something that just grinds higher for a while, and then eventually you get that emotional squeeze out of the people that have been fighting it, all the early shorts, right? But keeping it on the list just to make sure I stay familiar with the name and don't miss it if it were to set up. But again, nothing has to happen, okay? So after that, we obviously are in the second big week of the earnings, and there's a lot of names. I have a photo of the names. If you guys don't follow Earnings Whispers on Twitter, you're playing yourself. Just go follow them. Every single week they put out all the infographics of the important names reporting, right? So the ones I put on my list this week, it's still quite a long list, but I still didn't even cover close to all of them, right? There's a lot of names that I'm not going to go over here in this Sunday prep, but I am prepared for them. And I want you guys to understand, I'm not here to hold your hand and just feed you ideas every week. I'm actually trying to encourage you guys to create your own Sunday prep. So the names that are not on my list, such as, what were some of them? Yeti, there's Fiverr, Net, which is Cloudflare, Corsair, Under Armour, all those names that you don't see in my list, make it your homework. You guys go do it. Make sure you're prepared because all of those names probably will offer a trade as well. I'm just not going to do every single name on the earnings list, especially when it's this many names, right? So TTWO, remember guys, this was on last Sunday preps, short ideas. Now, with them reporting numbers this week, there's setups for both longs or shorts. It's depending on what the market's reaction to the report is. If they gap down big, that 139 to 140 area, you can see it right here, which is, let me switch to a weekly. It makes it a lot easier to see this setup. Why that level is so important, right? So if we were to gap down big way down here, I'm 100% fully confident in putting a long on to catch a bounce off that level. Problem is, I really don't think it's going to get that low on the numbers. I actually think that 150 is probably even asking too much of it. Let's see, 150 is going to put us right down in this area. I'd take a shot at 150 if it flushed down there emotionally, just knowing it's the psychological level. But again, you have pretty clearly defined risk with these recent lows under that level. So if it wants to just keep on going, I'll take my stop and I'll be praying for that 139, 140 area. We'll see what it gives us. Again, we don't get to decide what the market gives us. We play what we're given, okay? See, I wanted to point out the gap up level 2, which is this highlighted purple area, right? Actually no, I have written down 189 to 188. These highs right here, big spike up to those levels off the numbers, I would probably entertain the fade. All right, so BABA again, guys, cautious on these Chinese names. My guess is that if they blow away numbers and it spikes on earnings, a lot of people are going to use that pop to get out with minimal damage, because people are probably getting a bit antsy about this name. So my guess is that any big spike is probably a pretty good short opportunity, especially just for the day trade. So I'm looking at 205 if we spike off the numbers right into the 20-day and the quarterly pivot. If it wants to get through there, the next level is the 50-day, which is around 213. If they miss on numbers and this thing rolls over, I'd probably be looking to short pops. I really don't see myself entertaining any long ideas on BABA or any of the other Chinese names for that matter. SKLZ is a Kathy Woods name, and it's what I have written down is just, I think a pop back into 17 to 18 is a good fade spot. We'll see what happens off the numbers. LYFT. Depending on the market's reaction to these numbers, my levels are going to vary. For the fade, I like either the 64 area or the 68 to 69. So you can see, here's your 64 area, these recent highs. If it gets through there, the next level will be the 52-week highs. For scoops, I have 48 written down. So basically these lows, the quarterly and the monthly pivot, stack pivot area right there, I like that for the flush. If it were to gap lower than that, I have 45 and then 40 written down. It's really going to depend on where this thing's trading when the numbers come out. CVS. The 76 to 77 area I have for scoops. You can see very, very important level. So if we flush hard down there, I really like it. I have it written down as if it somehow can get down there. I don't think it's going to get that low if it misses, but you never know. You just want to be prepared for things, guys. The short spot for me is the 52-week high, so probably right into that 90 level. A big spike into 90, and I'd probably be there for the fade on an extension. ROKU. Now, ROKU, almost didn't put this in my list because it's hard for me to talk about this name and not include my personal bias about how I feel it's extremely overvalued. The problem is it trades 22 points ATR and it has volume. So like to not include it would be doing a disservice, right? It'd be selfish of me. So I did put it in here. My thoughts on it are a spike into 500. The psychological 500 level would be where I might try the short. I highly doubt I try to bounce it, even though it probably offers really good bounces. It's just I don't like this name. So if I do look to hit it, it'd probably be on the short side. Like I said, you guys have homework. The names I didn't cover in this list, you can go ahead and add finding levels you would like to be long ROKU on emotional flushes. Add that to your homework. I'm not going to do that one. Uber. They report the day after LYFT. So you may get clues on what Uber's going to do based on what LYFT does, right? And you will get a move after hours with Uber, or it depends. I'm not sure if LYFT reports pre-market or after hours, but when LYFT's numbers come out, you're going to get an Uber move because of sympathy. Happens every year, happens every quarter. So make sure you understand that. You will get clues from LYFT about what Uber's going to do. Possibly, like their numbers are, or the moves they make are probably going to be very correlated. I have 40 to 41 written down for the scoops. You see this annual and the monthly down here. You got a quarterly just above it. Pretty much a stack pivot area I really like. It also is, I didn't put the drawing in there. I mean, you guys can see this though. Just a very important level on the daily. So we flush down in those levels. That's where I'm looking to buy it for the bounce. If it comes down to those levels and it does bounce and you catch the bounce, I don't think it's something you marry. I think it's something you'd be selling back into a 43 to 44, 45 push, and even consider flipping short if it bounces back up into some levels really quickly. Just because if we get down there, it means we breach these lows, right? So that's the thinking behind that. If it spikes, I have 50, the psychological 50 level written down as the first area. Obviously, if it gets way through there, 60 is the next psychological level plus 52-week highs. Doubt it gets up there though. Etsy. Etsy. What I have written down is one thing I wanted to point out to everybody, and I'll turn the pivots off so you can see this better, is the way that we lost this trend line And we've basically been really struggling with reclaiming it. Every time we try to reclaim it, we get slammed back down. Reclaim, slam back down. And Friday just slightly closed under the 200-day, even though we are technically holding above the 50-day here, it looks like. It's, to me, the name seems to be struggling with these levels, right? So if they miss on numbers, I feel like they slam back down into this level, the 155-ish. And that's what I would try a bounce there. But what I have written down is if it loses these levels, I'm not going to ride this any lower, because underneath these lows, this thing kind of gets pretty dangerous in my opinion, and that's a big short trigger. You can see after trying to push up, it's probably got a lot of people long in this name. If it loses these lows, a lot of people are bagged. Can see it better, I think. Let me check. Yeah. I really wouldn't stay long in this name. After we lose 155, I'd be looking to short pops. That's what I have written down on it. And if they do beat on numbers, I have written down 207 as the first spot for a fade. Pretty much in line with these highs, right? And previous quarterly pivot. Sometimes you'll see me play those previous quarters. So that 207 area, if it gets through there, 220 is the next spot for me, 221. FSLY. This one's been weak. I think, you know, if they miss, we come down here and possibly test these 35, this 35 level. I might get in around a 41 area just because it's these recent lows you can see right in here in the quarterly pivot. I might take a shot there. Depends on what the reaction is to the numbers. But if it gaps down below that, 35 is the next spot. Spike towards 56.5 to 58 is what I have written down for the fade. WDC, push to 71 for the fade. You can see the 50-day up there with the quarterly. I think that's a thick spot that it's going to really struggle with getting through. I may even leave room to add into that 72.30 area, or a flush to 57. 57's been a key level, and it would be a pretty decent sized flush to get it down into those levels. WYNN, no different than Las Vegas Sands. You know, this is really hinging on whether they're going to put us back into another lockdown or not. So I have written down 87 to 88 for scoops, or a spike back into 108, 109 level for a fade, which is the 20-day, the quarterly, and the monthly, all in that same little spot, which is also going to put us right into like a retest of the broken trend. So definitely some confluence there, and definitely a reason for me to want to try to put the fade on at those levels. Square's the last name on the list. And what I've written down is it reminds me a lot about, was it Etsy that we just were talking about that was similar chart? Yeah, it was Etsy. So basically, no different, right? We lost this trend line, and it's been trying to push back up, but we have not reclaimed. It's really been kind of just, you know, we're back towards 52K or 52-week highs, but this just has this Etsy feel to it. And I feel like they miss this 190-ish spot. Look, let's see, I have 193 written down as the spot for to try to buy the long on an emotional flush. But again, just like Etsy, if we lose those lows, I have written down under 190, 136. I'm not going to fight this, and I would be short biased on it and look to hit pops. If it's spiked, let's see, what was the spike? The number for the spike for me is the 52-week highs. So we come up into this 280 area off the numbers. That's where I'm probably looking to get short the name. That's it for me, guys. It was a long one. These earnings weeks are always a bit longer and a bit more work, but hopefully you guys find value in it. Again, make sure you guys like, subscribe, comment. Let me know what you feel about these things. If you want to see improvements, things that I could do better, things that are not clear, maybe you need clarification on some stuff, let me know. And I'll see you guys Monday morning, ready to crush it. Peace.